All right, let's talk about AMRK Precious Metals, ticker AMRK. So they just dropped their latest numbers. And get this, their gross profits shot up a whopping 90%. You'd think Wall Street would be throwing a party, right? Well, not exactly. The stock actually cratered after hours. So what in the world is going on? That's the big question we're going to unpack today.
And here it is, laid out plain as day. It's a total head-scratcher. On one side, you've got this incredible, eye-popping number, gross profit up 90% year over year. That's huge. But then you look at the other side, and the stock gets hammered, down over 8% in after-hours trading. I mean, come on. When you see a disconnect this big, you just know there's something more going on under the surface.
Okay, let's dig into the actual numbers because this is where the plot really thickens. So first up, EPS. That's earnings per share. They beat expectations, 60 cents versus the 57 cents Wall Street was looking for. So far, so good. But then, bam! Look at that revenue number. They were expected to bring in almost $3 billion, but they only hit 2.5. That's a massive miss. We're talking nearly $400 million short. So what does this tell you? It means they're making way more profit on way less sales. That's the key right there. But the market, well, the market seems to be completely fixated on that top-line miss and a couple of other worrying signs we're about to get into.
So let's switch gears and look at this from management's perspective. What are they telling investors? Well, they want you to look past this one quarter's revenue number. For them, it's all about the big picture, about building what they're calling an all-weather platform.
And this quote from the CEO, Greg Roberts, really sums up their entire pitch. He says their results, and I'm paraphrasing here, prove that their integrated platform works even when the market is tough. You see, in their minds, this quarter wasn't some kind of disaster. It was actually the opposite. It was proof that their strategy is working.
So you're probably asking, okay, what is this all-weather platform? Well, it really boils down to three key things they're doing. First, they've been buying up other companies, but not just any companies. They're targeting businesses with better profit margins, like collectibles and auction houses. Think Stack's Bowers. These are businesses that aren't so tied to the day-to-day price of gold and silver. Second, they're getting smarter and more efficient with their logistics, centralizing and automating everything. And third, they're going global, pushing into Asia through a new hub in Singapore to tap into a whole new customer base. The bottom line is they're trying to become much more than just a company that sells precious metals.
Okay, that's the sunny story from management. But as we saw with the stock price, the market isn't quite buying it, at least not yet. Investors are looking past the CEO's big vision, and they're seeing some storm clouds on the horizon.
So, the big question is, what's got everyone so spooked? What are the red flags that made that massive profit growth seem, well, almost irrelevant? Let's get into it.
And really, it all comes down to these 3 points. First, and this is a big one, people are buying less metal from them. The actual volume of gold and silver they sold dropped a lot. We're talking down 23% for gold and down a staggering 38% for silver. Yikes! Second, they're not attracting new customers like they used to. That growth has basically slammed on the brakes. And the third one, this is the real killer for Wall Street, they gave zero financial guidance for the next year. No numbers, no targets. When a company does that, it screams uncertainty. And if there's one thing the market absolutely hates, it's uncertainty.
And if that wasn't enough, there's this weird technical thing that came up on their earnings call. It's called backwardation. Now, don't worry, it sounds more complicated than it is. Basically, it's a funky market condition that messes with how AMRK makes money from its financing and hedging activities. Usually, that part of their business is a nice little moneymaker, kind of like a tailwind pushing them forward. But because of all this uncertainty in the market right now, backwardation has flipped that around. So that tailwind, it's now a headwind blowing right in their face.
All right, so you've got two completely different stories, right? You have management's grand vision for the future clashing with the market's very real fears about today. So let's step back, weigh both sides, and figure out what our take is on this whole thing.
So here's the bull versus bear case, side by side. It really is a tug of war. On the bull side, the potential is definitely there. If they can make all these new companies they bought work together smoothly, that could be a huge win. Plus, their collectibles business is already on fire. But then you look at the bear case. The risks are just as real. Their main business, selling bullion, is getting squeezed. This whole backwardation thing could stick around. And let's be honest, trying to merge a bunch of big companies at once is really, really hard. There's always a chance they could mess it up.
So after all that, what's our call? We're rating this a market performance. Look, the move into collectibles is brilliant.
It's smart, it's already working, and it gives them a buffer. But at the same time, you just can't ignore the problems in their main business. Those headwinds are strong and they're real. So for right now, it feels like the good and the bad are pretty much canceling each other out. Before we get more excited, we really need to see proof that those new businesses can make up for the weakness in their core operations.
Now, for those of you looking for a potential trade idea, here's something to think about. This is what's called a pairs trade. You'd go long on AMRK, so you buy their stock, and at the same time, you'd go short a gold miners ETF, something like GDX. So what's the logic here? Well, gold miners are basically a pure bet on the price of gold. If gold goes up, they do great. If it goes down or just stays flat, they get hurt. But AMRK, with all its different businesses, collectibles, logistics, financing, is a much more diversified company. The idea is that even if gold has a rough patch, AMRK's other segments could help it hold up better than the miners. So you're not just betting on AMRK to go up, you're betting that its business model is simply better and more resilient than the pure play miners, especially in a choppy market.
And we have to say it, of course. This is not financial advice. Make sure you do your own homework before making any investment decisions.